Hello, everyone. Welcome back to the speaker hall. Our next session, East versus West, the crypto divide is getting real, tackles one of the most compelling debates in digital finance today. Our panel of experts will examine the challenges Asia is facing as a crypto hub and explore whether the global sense of crypto liquidity is quietly moving east despite tighter regulations. Let's give a very warm welcome to our moderator, Berenson, Managing Partner at Asia SGE, and our distinguished speaker as well.
Thank you. Thank you very much. Hi, everyone. How are you? All good? Great. Thank you for joining us this afternoon at IFX. My name is Ben Berenson. I'm here with Alan Lau. Alan, do you want to introduce yourself before we start?
Sure. Good afternoon, everyone. Alan Lau, CBO at Animoca. And we're going to talk a little bit about who Animoca is, but we're one of the biggest crypto firms in Asia with a big portfolio of 600 companies.
Thank you, Alan. Myself, I'm heading a group of companies under the banner of Asia SGE. We're, call it old school crypto founders, came together and launched this advisory firm that focuses on governance and compliance for crypto, Web3, and deep tech companies, among other things, but that's the core concept. Let's start. So guys, the title of the panel, East versus West, the crypto divide is getting real. Someone here, raise your hand if you work in crypto. All right, few of us here. Anyone here own crypto? Any cryptocurrencies, crypto assets? All right, we're getting there. Anyone is interested in aspects of regulations? All right, two of you. Okay, I think with that we can start. We have a good feel of the room. I'll just hang up this. All right. So, we will start with a very important topic, which is market creation versus market capture. As you know, Western teams have historically led the charge in building foundational crypto infrastructure. If it's Ethereum, if it's Solana, Layer 2S, modular chains, I mean, there are a lot of players in that space. But most of them are known to be in the West. However, when we actually look at where trading volumes are or where the liquidity is and generally a boost of user activity, we find that the most is actually concentrated in the East. Now, when we inspect that and we try to understand how those two worlds interact between each other, it raises some very interesting points. It raises a fundamental question about who is actually capturing the market value that's being created. So, with that, the question rises, is the West creating the infrastructure while the East captures the liquidity? And what does that mean for long-term investor returns? So if we're focusing on investor returns and about value captured, where do you think the focus is?
Thank you. There's really two parts to your question. I'll pick up the second part first. The first one is, did the West come up with all the innovation? The answer is no, and I'll double click on that. But on liquidity, I mean, there's definitely a lot of liquidity in Asia because 60% of the crypto holders are based in this region, 40% of the whales are here, so clearly there's a lot of money, right? And when you think about who are the biggest traders, speculators globally, you would definitely have Asia in mind because, I think the Koreans are one group that comes to mind. And it's not just crypto. I mean, they are very keen investor in Nasdaq as well. So if you look at who's actually putting a lot of money into the NVIDIA, the Tesla, the Robinhood of the world is actually Korean. It's actually a Korean investor. So that goes for TradFi, for stock, but also go for crypto. So what's really interesting in the past couple of months, for those of you who sit here, I saw that maybe half of you raise your hands around crypto holdings. You probably have heard of these crypto asset treasury companies. So the prime example would be what Michael Saylor has created with MicroStrategy. So the Koreans have really shifted from buying Tesla and Nvidia to buying Bitmine, Upixi, and all these different firms. So they've shifted actually to buying digital asset treasury companies, and globally they are actually the biggest buyer, right, of those stock. So I think going back to liquidity, I think within Asia there's always animal spirit here. So Korean is just one example. Of course we know that a lot of the crypto whales and liquidity are from China. Not necessarily sitting in the mainland, but it's Chinese that are in all kinds of places, whether it's in Singapore or in Dubai, right? So therefore, I think when it comes to liquidity, I would definitely say that yes, I think Asia is definitely a place that people want to pay a lot of attention to because this is where the big buyers are.
Great. I think those are great points, and it kind of begs the question about risk taking and general attitudes and behaviors, because it seems like from what you're saying and from what I think I speculate also is that the East is much more prone to take risks, much more prone to kind of lead the shift. What do you think about that?
If you go to casinos, you really will have a sense. If you look at the mix of people, of course Macau is in Asia, so you see a lot of Asian. If you go to Vegas, you still see a lot of Asian. So I guess when it comes to risk appetite, I think there is definitely more risk taker, more entrepreneur in this part of the world, right? But I would also go back to the earlier part of the question, which is did innovation all came from the West, right? I think when it comes to digital asset, I would say that's definitely not where it got started. As we all know, a lot of the Bitcoin miners started in China, and that's why the first pots of gold were really made in this part of the world. And these are the investors that become with a much bigger budget, become very institutional. They're putting money into all kinds of alternative assets. And even if we look at founders right now, for those of you that's in the investment field, you would know that there's actually a lot of Asian and specifically Chinese founder. So it's actually quite interesting to think, did innovation come from the East and the West? If you think about where these people are sitting, maybe they're not sitting in Asia, right? As I said, a lot of them have moved on because of regulation, which I know we're going to come to. They're in Singapore, they're in Dubai, some of them are even in the US, right? But a lot of them had a history of roots that tie back to this part of the world, partly because I think Bitcoin mining was really a big part of how digital asset industry got started, and this is where the action was.
No, I totally agree with that, and I think that over the years, I've been between China and Hong Kong for the past 13 years, and I got relatively early on in crypto. And when I started my journey in it, I really felt that. I felt that people that are here, when they kind of see the opportunity, they capitalize really quickly, and there's no glass ceiling. So pushing through, pushing hard, it's really embedded in the mentality in the region. At the end, as the industry developed, you would imagine that it would trickle down into institutional development, more technology, and just better infrastructure. And this is a lot about, I guess, regulation also. I think it's really important for us to touch within that aspect as a last point, really about the trading volume concentration, right? And we know that the big exchanges. So you have a lot of exchanges around here, and some of the bigger ones are also based around here. Do you think that this is a big factor when we look at East versus West?
I think, as I said, there's some history. Some of the largest exchanges here, while the jurisdiction not in the region now. I mean, they all came from here, whether it is Binance or OKX or Bybit. Right? These are all exchanges with Chinese founder. And if you look at who is the next set of exchanges? Of course, you have Upbit and Bithumb from Korea, also huge trading volume, right? So actually, if you think about it, if I can call it that way, Western exchanges are the smaller exchanges. They're almost like the outlier, right? Because the really big ones are all founded by people that came from this part of the world.
It's really hard to start talking about those topics and keep regulations for later, but I think we will do our best to hold a little bit.
And I think, to talking about it's quite difficult to describe even geographies because people ask me that question all the time, which is, Alan, you said you had 600 companies in a portfolio. Where are they from? And I really want to do a good description and pull some stats on where they're from. But when you had teams, and this is an example, right, which is, a founding team that is ethnically between American and Chinese, and they're based in San Francisco and Shenzhen, and they have an office in Dubai, and they have a tech team in Shenzhen, and they're living in Zug in Zurich. So, it's almost impossible to describe where do teams come from and what is the origin of it, right? Maybe it will change. I mean, part of the reason why there was a setup is, of course, not every country has welcomed crypto in the past 5 years, right? So it is not legal in China, right? And the US, until 18 months ago, has had a very hostile set of regulation towards crypto, right? And that's why, people are moving around. But I think there's also the inherent nature of crypto as well, which is, it's very decentralized. So, teams are really all across, right? So, for example, even for us, we've got people in 8, 9 locations across the world, super decentralized. And I think that's just, I would say, almost like the ethos of crypto in some sense.
No, this is a great point. And I think this is a lot about, if we look at value captured, a lot of the work that we're doing is about corporate structuring. And back in the day when we started, 2016, 17, and people just didn't know what to do. So they would go to Seychelles, BVI, try to figure it out there, just to stay away from, the public eye to the best of they can, because there's just no guidance, right? Even if everything was very well built, they just didn't know how to treat that. When now you see that, founders come, they bring, the Deloittes, the PwCs, the DLA Pipers, and they sit down and tell them, we want to go there, open that market, we want this license, we drive traffic here, and so on and so forth. And at the end, it becomes such a international type of setting that it's really hard to just put a finger and say, that's the value, right? No, I love that. All right, before we summarize this first point, let's throw you guys another curveball. If we're looking at 2026, built on what we were talking about, we'll do hands raised, East versus West. Do you think value captured would be East? Raise your hands if it's East. Come on, don't be shy. It's okay. All right. West? So whoever didn't raise his hand is either sleeping or didn't have enough coffee? All right. I'd say it's about equal.
It's about equal, it looks like, yeah.
Yeah. All right. Next point is about risk appetite and capital allocation. I think generally in Asia, capital allocation is always a big topic. So regulation, often seen as a barrier, but it's also a signal. In the West, increasing security from the SEC and EU regulators has pushed capital towards compliance-heavy projects. Meanwhile, in the East, the Eastern markets are embracing experimentation, attracting speculative capital, and retail traders at scale. And this divergence is reshaping how investors allocate risk. So, question that we're going to discuss is, are Eastern markets becoming the new frontier for high-risk, high-reward crypto investing, while the West just plays defense? Regulations, I don't know if that's the key point here.
I think every industry will come to a point where you would need a clear regulatory framework to expand, right? I think it's okay to start small, to start scrappy, and you said, we're innovating this, we're disrupting that, right? But for you to truly gain scale, whether it is in retail and the institutional side, you will need clear regulatory framework. And honestly, that's what's been holding back crypto development in the past couple of years, right? And, but then, while not every jurisdiction has been open we've definitely seen a lot of willingness. For example, we talk about Dubai, in leaning forward, in really creating very accommodating, open-minded regulation. VARA, I think incredible regulator. I mean, only if all regulators are like that, right? Very open-minded, want to hear from the industry, keep it, obviously have all the interest to protect investors, but also trying to find the right balance with allowing innovation to happen, right? So I think Dubai is definitely that. We've seen Hong Kong in the past couple of years. I still remember it was on stage in 2022 where the financial secretary was saying that they're going to lean in and support digital asset. And that really unravels, a whole bunch of supporting regulation that we're seeing in Hong Kong right now. So, and we're seeing different Asian markets picking that up. Korea is very much brewing that with the new prime minister. Japan has been a bit slow. Actually, they started talking about it almost at the same time as Hong Kong, but hasn't really picked up. And I'm sure a lot of you have heard of the story in Singapore. They started out coming in really strong to say we want to welcome everyone, only later on discovering that actually we don't want to welcome everyone because we're not ready for it, right? So, I think there are markets that went back and forth, but I would say, at least in Asia, there's a lot of countries that are ready to lean in because they see the potential, right? And I think, of course, then we need to go back to the West, which is the US, right? So for the longest time, it has an extremely hostile regulatory environment until 18 months ago, right, with the new administration. So, I think what you've seen with that is you've seen companies onshoring again, right, going back to, people or projects that were originally from the US who left and has gone back, right? So we've seen a lot of that. And, we are now seeing more projects that we've invested in deciding to either go back to the US or start in the US, right? So I think that's really interesting. And of course, with the US, a really big part of the development is the bridging of crypto and Wall Street. So I mentioned briefly digital asset treasury company. I think that's a prime example of how do you bring crypto into Wall Street. And of course, we've seen a lot of listing on NASDAQ of crypto companies as well, right? Including Circle, Galaxy, more recently Figure, right? These are all unthinkable even just a year ago to see that, the market will open up this way. And I think going back to capital and liquidity, when you have Wall Street, which really is the biggest liquidity pool out there in the world, opening up for crypto, you have other people following as well.
Right. It's a really good point. I remember 2019, I was giving a talk in CVCF, the Cyberport incubation program, and there were a lot of institutional investors. And they were still using the words like, is it a scam? What's going on? Like they weren't sure. And I told them, we're not far from the day where banks will have to give, when you open a bank account, you'll have a wallet attached to it. It's just inevitable. And fast forward, 2019 Asia Financial Forum, there was the big announcement by the SFC, the first one about, mentioning the words digital assets. So it's really interesting because you see that things are picking up at their pace. Even Japan, it's a long conversation, right? But today, it seems like they're kind of ready to break through and do that. But I think another
new prime minister that maybe she would pick it up, right?
She will. Yeah, we're confident. But at the same time, I think if we go back to the point of capital allocation, you're an institutional investor to begin with. I work very often with family offices, with institutional investors, and when they want to explore markets, they started asking these really sophisticated questions where, crypto founders, they come in, they're blazing with technology, we're going to disrupt and all those big words. But now they're asking the question, what's your regulatory approach for the next 24 months? In a lot of occasions, they sit down, they look at them, they don't know what to answer. So I think the narrative changes, and I think it changes to the better. And we're really guided by what the things that are happening in the US. It becomes really interesting. I really enjoy seeing the development.
And I think it goes both ways. If you want the next step, if you want the next pool of liquidity, which is clearly coming from TradFi, I think you need the regulatory framework, right? One of the projects that we're going through, they're trying to take money from traditional family offices into crypto. And now the question is very much around, who's your custodial bank, what is your fund structure, and these are things that crypto founder never have to think about. But it's very simple. If you want to tap that new liquidity pool, then you have to think about all these things, right? So it's a two-way dialogue as well. I think there's clearly interest to lean in and also support from different jurisdictions as we've seen so far.
Great. Yeah. I think the last point, and I think that's my probably favorite point in this topic, is the high risk, high reward. And crypto notorious for high risk, high reward, right, since the beginning. And we all like the new token listing and those interesting, new things to the market. And this is really where you can do the high risk, high reward. But I think that there's still a long way to get to a point where regulators can actually look at that, or there's like the right type of frameworks that can be put in place to safeguard the retailers, right?
And I think also, on the high risk, high return, I think product-wise, crypto has matured as well. Of course, you can do venture investing into startups. You can put your money into meme coins, right? That's very volatile. But then there are now, in the traditional finance sense, there are much safer investment even in crypto, right? So one of the JV that Animoca has announced recently is one with Figure, which recently got listed in NASDAQ, has done extremely well. So what Figure does is they issue second mortgages and issue these as tokens. So instead of going through the traditional banking processes, which takes 45 days to do, each mortgage comes in and it's immediately put on the blockchain, and it come out as an NFT, as a token, right? And then they're going to take these tokenized assets, which generate 9% yield. Very safe, default rate is, less than 0.1%. And, they sell these tokens to big institutions. It was Goldman, KKR that buys it up every month. They mint $800 million worth of second mortgage in the US every month. And it's all bought by big institutions. And now we're setting up a JV with them, trying to bring that product to more traditional crypto investor. And of course, you were asked, if maybe crypto investor are used to high risk, high return, to your point, right? Meme coin, primary investment in project. But, there are also capital that might be looking for something that is, a little bit more balanced, right? And that's why you also see that BlackRock has launched tokenized money market fund Buildo, because sometimes people want to park capital and they want to earn 4%. And it's okay that earn 4%. And there will be a next tranche of capital where they're okay with accepting 9%, right? So, I think now, even in the crypto sphere, people are getting a lot more sophisticated. They're thinking about portfolio. They think about how to balance it. And that's why this is on the demand side. That's on the supply side. There's also much more diversity in terms of risk profile as well, right? Like, the product that I just mentioned, which is, a secondary mortgage, which has been historically in the US extremely safe.
I think 2026 will also show a lot of interesting stuff on the insurance space, but I cannot share more. We will see.
That is super interesting. I mean, that would be the next thing that we're thinking about launching, which is, there's a lot of asset locked up in insurance company as well. So you can imagine them tokenizing. I'm sure you're working on some of those projects. I mean, people are also talking about, instead of buying insurance in Hong Kong dollar or US dollar, you can buy it in Bitcoin.
Yes.
Or you can buy it in Ethereum.
Yes.
So when you get the payout, it's actually paid out in cryptocurrency. So again, it reflects a different risk profile and what is your anchoring currency. And I think people now want to have a choice,
yes,
right? And I think over the next 12, 18 months, you're going to see a lot more of these new products, which offer people a different anchoring currency choice, but also a very different risk profile. Again, when you buy a Bitcoin insurance policy, you're not betting the farm. You're not hoping for a 20% return. So, but then it's still crypto. So, I think, again, going back to high risk, high return, I think, the product set and also the demand is evolving as well.
Maybe it's a side of asset allocation, but I think a good point to raise is, I think it was last year, a few friends and myself happened to be selected as KOLs for Circle Foundation in Asia. So they did this big breakfast, and we went there, And they did this big speech. And in the speech, they were saying about, we, Circle, are now working on a project with the government. And by next year, you can pay your water bill with USDC. And you look at that and you're telling yourself, if people would have the choice, would they choose USDC in Hong Kong? But if you give them a choice with a perk, and this opens the door to those safe allocations and whatever other things that the crypto market can bring them, that would have been astounding, right?
And also, I think it depends on how quickly that merchant network get rolled out, right? I think clearly, I'm sure everyone has heard of the benefit of paying by crypto, because right now we've all experienced doing cross-border transaction takes 2 days. They're going to charge you 2%, whereas in crypto it's like 1 second, 1 cent, right? I mean that's the idea. So if you're a small medium enterprise, that is very attractive. And I think Square and a lot of other people, PayPal, I mean they're really trying to build that crypto payment capability for a lot of the small, medium enterprises. So, I think that needs to catch up first.
Yeah.
For people to say, hey, I'm going to keep some money in my crypto wallet for payment. Yeah. But, if I'm just imagining use cases, if I'm buying stuff from Amazon in the US and if there's a USDC payment option, why not? Yeah. Right? Especially if it's cheaper, faster, and all of that as well, right? So, I think there's clearly a lot of trade flows, even at the retail level. Me buying from Amazon in the US, that's a trade flow, right? I think payment form like, USDC or other stablecoin would really make sense.
I think this is why today we can still not do those payments with USDC, because I think the adoption from the government side has been a bit slower than they expected. But anyway, let's go to now the kind of cream of the crop type of topic, alpha generation and deal flow. This is also our last topic, so we're sorry that we're running out of topics. Capital flows is where alpha lives. And Western VCs still dominate early stage funding. That's a bit of research, might be wrong. However, the Eastern ecosystems from Vietnam to Korea are producing breakout projects with massive traction. Investors are now asking, where's the alpha really being generated? And how do we access it before it goes mainstream? So will the next wave of outsized returns come from East-based projects with West-based capital? Or is that model already outdated? We did cover some of it, but I think the point that we want to look at is more about, from the investor side, cross-border deal structures, syndication. What are the trends that you're seeing, Alan?
Yeah, I think we've talked a little bit about where's the money, right? Clearly there is a lot of retail participation in Asia. There are big institutional money in Wall Street. So I would say, let's call it even. It's a tie, right, between East and West, right? When it comes to project, we've also briefly mentioned it. I think crypto is really one world. It's very difficult to say whether it is an Asia project or is a European project. There are some, of course, right? But most of the time, it cuts across geography because teams are very decentralized. I do think there is one or two aspects where geography would make a huge difference, right? One is around anything that is much closer to Wall Street. I do think US has an advantage, right? So that's why if you want to launch a treasury company, if you want to get listed, then I definitely think US or project that is based closer to, or you have asset and relationship in that part of the world is still more important, right? On the institutional side, right? And then I would actually say on the retail side, the flip is correct. If you want much more retail participation, Korea, China, Turkey, right? These are the places where there's a lot of retail participation, right? So it depends on what are you trying to tap into, right? But certainly when it comes to the origin of the company, I think it's very decentralized. As to investors, so this just came out 2 weeks ago from one of the survey, I think it was CoinDesk or Cointelegraph, just looking at who are the biggest investor in crypto up to last month. And number one was Coinbase, and number 2 was Animoca. So, one US, one Asia, right? So, I think they did 80 deals year to date. We did 65, right? So it's pretty close. So again, I think capital, we had different starting point, right? So, again, Coinbase was very much a US hedge project, and, we had an origin in Asia, but we tap into different sort of founding investors and partners, right? So I would say, on that one, you have moment, you have, these institutional of innovation everywhere, I would say, right?
Yeah, I think I totally agree, and I think that to talk about deal flow, we need to talk a little bit about, accelerators and the type of catalysts in the market, and really look at that East versus West. From my experience, I think the last, 6-7 years, accelerators appeared in the region like mushrooms after the rain, and they have like 3-4 projects that become an accelerator, very little points of differentiation there. Are there any founders in the audience? Founders, raise your hand. Founders that went through acceleration, raise 2 hands. Okay. Anyone care about accelerators? Okay, we'll talk about it
What was
anyway.
your experience with accelerator?
Oh man, I love accelerators. You get inside, and I think it's always messy to begin with. Then really quickly, once those ends starts meeting, then they see where the value is in the actual acceleration, how they need it, where they need the support. I do mentorship through the Founders Institute, and it seems like there's an ocean of companies, and they do things that when I read the description, I'm like, what? How do you even do that? I mean, it's just odd. But people go work really hard, get into acceleration, but at the end, the institutional investors that come and speak with them are, if they're Vietnamese, the institutional investor is Singaporean or Cambodian or Hong Kongese. And it's really interesting to see that those guys, they come with small tickets, but they'll do a lot of small tickets rather than, the Western accelerators that you need to queue up for over a year until you get a chance. But when you get the chance, it usually means big money.
I think that's a very important way for us to also identify talent. For screening and Darwinian principle to play out, because then you can see, who's got the better ideas, who can actually execute, and, that's a fantastic way to build network and ecosystem as well. So, yeah, I think especially for frontier tech technology like blockchain, mechanism, whether you call it accelerator, hackathons or whatever, and all those are super important for us, right? And actually a lot of them happens here in Asia. Again, we just came back from a big hackathon event in Vietnam. There's actually a lot of developer base. Of course, it used to be in China, and now in Southeast Asia, there's a lot as well. People that are hungry, that are good, that are coming up with great ideas.
Well, guys, we have just 3 minutes left. We will wrap up with maybe each one will do one little statement about 2026 East versus West. But before that, we'd love to take some questions if you have. Okay, we don't have any planted questions in the audience, so really give it a go. One question. There you go. Gentlemen.
Hi, my name is George. A little bit on the side. After all, you're on the Forex conference. Yeah. What's the outlook of the future of Forex versus crypto exchanges and all that? Will it eat each other, or the other way around? And that also, you've mentioned how retail purchases can be done with USDC. You mentioned specifically, but we all know that over 99% of stable coins are used for liquidity balancing between the exchanges, not really in retail. Do you really expect stable coins to become a retail instrument rather than just liquidity used by professional traders too?
Wow, super interesting. Yeah. I mean, I'm not an FX expert, but I do think the two worlds need to come together, right? I'm sure that you know that now. The people talk about de-dollarization a lot, right? And if when there's more stablecoin that's being launched right now, I do think that there will be a lot more on-ramp and off-ramp. So if you're in FX, you have to think about cryptocurrency as one of the more important new currency that you need to create a pair for, right? And of course, right now, a lot of the traditional FX, I understand it's really paired with US dollar being the biggest one, right? I mean, I can totally see one off or maybe 2-3 off the stable coins would become very important pairs as well. So you definitely need to prepare for that. As to a retail adoption of a stable coin, as I mentioned, I really think you need to push it on the merchant side first. There needs to be enough people that want to accept it for people to want to spend it, right? The spending part is easy because if you believe that more people is going to hold crypto in the wallet, and there's a whole bunch of research out there. Mostly people would say there's about 30% of people sort of investing adult would hold crypto right now. So there's enough number of people to hold crypto. Now I think the next leg depends very much on a merchant. But I do think as I said, the paper of the world is really pushing it. Even so, the banks are pushing it. So I think it will happen, but it probably won't be a 26. It probably won't happen in a big way in 26.
I think it's good points. It's a very good question. Thank you, George. Not sure if 99% of liquidity or traffic is between exchanges. I think that there's quite a lot elsewhere. I see it a lot in commodities trading. I think stablecoin became like a go-to way of doing commodity trading worldwide, and not only oil and gas. It can be a lot of other things. The one thing that they have difficulties with is really on the operational side, the reconciliation of it, but the usage is undeniable. We can see a lot of other type of cross-border transactions that are very, normative stuff being handled with stablecoin simply because some trade with more exotic jurisdictions. And even if everything is fine and regulated or just normal, there's a lot of liquidity there that is just the way that it's being reported for the purpose of accounting and reconciliation is not as stablecoin usage. So I think a lot miss that. But I think this is a whole new conversation by itself. I love that. It's a great conversation. I do that for a living. So I'm happy to have a chat. I think we're overrunning the time, and we really apologize, but we want to say a very big thank you. We're very optimistic about 2026. Stay tuned and have a nice day.